Well, thanks enormously for this great opportunity to speak at quite possibly the most important Africa-centric event of the year, and there are a few. My name is Wayne Hennessy-Barrett. I'm the founder and chief executive officer of 4G Capital. We provide business working capital to micro and small enterprises in sub-Saharan Africa using our own fintech platform. But I promise to keep the buzzword bingo to an absolute minimum. And I also promise to make sure this is not just another conversation about microfinance, because that is an old conversation, as important as it might be. So we're going to look at financial inclusion in the broadest possible terms. And we're very, very lucky to have a very, very strong team here representing international infrastructure investment, private equity and debt investment, conventional banking in a very, very highly evolved format, and two entrepreneurs also in the energy sector as well as the fintech and technology lending sector. Why is this important? Well, the last thing I'm going to do is lecture an Africa-focused audience about why we're here. But it's just worth remembering the size of the opportunity from not only a commercial standpoint in delivering high yields if you can find the right product in the right channel to solve those client problems, but also how, as a global village and as an international community, this is moving from a discretionary activity, I would argue, to an existential activity, as developed, so-called developed markets remain moribund, certainly in Europe and elsewhere, where the scale of change and risk is becoming more alarming by the day. That growth opportunity rests almost exclusively in Africa in a manner that can be genuinely met head-on in a way that not only solves real problems, but can actually bring us together as a planet. Okay, and we need to start thinking a little bit more as a species, where our shared value wins, create a better outcome for everybody. And I can only echo and applaud the Minister's words just now from the Secretary of State. So, enough from me. Ibukun, please introduce yourself. We're very honored to have you here.
My name is Ibukun Awosika. I chair the board of First Bank of Nigeria. We're 124 years old and probably the oldest financial services group within our sector.
Thank you. Giles Hedley.
Hi there, Giles Hedley, work for a company, Barak Fund Management. We are alternative financier providing debt solutions to a host of SMEs within the African continent. Current assets under management around about $1 billion to date.
Fantastic. Anna, please tell us about yourself.
Anna Hadjuka, I'm the CEO of Africa GreenCo. Africa GreenCo looks at new innovative models of delivery of electricity, especially renewable energy electricity in sub-Saharan Africa, both on the on-grid and mini-grid side.
Fantastic. And Philippe?
Philippe Valahu, CEO of the Private Infrastructure Development Group. We provide financial products across the capital structure and along the life cycle of the infrastructure asset class in sub-Saharan Africa, South and Southeast Asia.
Fantastic. Well, thank you very much. We have, as you might imagine, a series of themes which we're going to address, and my hope is that we can raise and lower the magnification and the gain level on each question from each of the respective segments and sectors that we are here representing. So I guess question number one, and it's slightly obvious perhaps, how is inclusive financing key to Africa's equitable economic transformation? And by inclusive financing, I mean that in the broadest possible terms. Perhaps looking at the macro level of mobilizing capital internationally. Philippe, would you like to share your thoughts?
Sure. So when I spoke to Wayne earlier, I asked if we're allowed to be provocative this morning. His answer was yes, within decency, so I'll take that under advisement. I was speaking at a conference about a month ago, and it was about impediments to private investment in infrastructure in sub-Saharan Africa. My first slide on the wall had 9 bullet points: lack of local capital markets, local currency, capacity building, regulatory framework, etc. And everybody in the room was nodding quite furiously. And I had to stop and look at the audience and say, this is the same PowerPoint presentation I used 20 years ago. If you're all saying that we haven't changed anything, then I have failed miserably in my career, and you all have in the room. surely things have changed dramatically. And I think that's a point that was made quite eloquently by members of the panel before us. And so to answer your question, I thought I'd give that as background. If we talk about inclusive finance at the highest level, one of the bullet points on that famous slide was local currency funding. One of the things that we've done, for example, is set up an entity in Nigeria, a private entity called InfraCredit, which we've developed with the Nigerian Sovereign Investment Authority to provide credit enhancement to local corporate bond issuance. We set it up 10, 11 months ago. They've just underwritten their first bond 2 months ago. That was taken up, so this is $40 million equivalent in Naira, taken up by 12 Nigerian pension funds and 3 insurance companies. Financial institutions that until then had not invested in the infrastructure asset class. So we are helping develop local capital markets by bringing in local pension funds, helping them understand how to underwrite the infrastructure asset class. On the back of that success, we're developing the same thing in Pakistan. We're looking at Kenya and other countries that are coming to us and say we need to do the same thing.
It's fantastic. That's fantastic. Well, so maybe going from that sort of conglomerate level, if I can use that term, and coming down to a private equity fund or a debt fund. Giles, how does this play for you?
Yeah, I think Mr. Fox touched on it, that the trade and investment is the catalyst that we see in Africa. And I think that's something that we've harnessed as we've grown, launched in 2009, focusing purely on the short-term side, debt into Africa. And as our sort of counterparties and borrowers have grown, so have we grown with them, and it's moved into the infrastructure space in staying with a lot of those same borrowers. So we look at the inclusiveness of transactions with those counterparties as adapting to their needs, and I think a lot of it points back to the partnerships that inclusiveness harnesses. We're not just providing a credit line and see where it goes. I think we're very much involved in the step-by-step stages of that growth.
Grant, so Ibukun, from the perspective of your bank, the great work you've done before and where you're heading now, and I guess the word I really want to drill into is equitable economic transformation. How does an inclusive approach make a difference as opposed to maybe a different approach, maybe a more linear approach?
Well, if you live in a country, a continent, but let me just use Nigeria as an example, where your population of men and women, it's about, let's say 50-50, because it's like 48 and 52. And if you have only about 38-point-something% banked, involved in the financial services sector, and Nigeria has the highest percentage of those involved in the financial services sector, but we also have the highest percentage of those that are excluded from the financial services sector. And if you combine that with the natural strength and character and strain of maybe the average Nigerian, their dynamism and natural propensity for entrepreneurship, and you look at what are the hindrances and those things that can sort of stimulate growth and facilitate unleashing those talents, then you understand why it is critical to find an inclusive solution to a financial system. And for us as a financial institution, where will our growth come from? Sure. If in any sense we do not sort of empower that large part of the population that is not involved in it. So there are different parts where we play as a bank, but even more important is how we play as a nation, using Nigeria as an example. And I see institutions like us and like Bank of Industry in Nigeria, which is a developmental bank and harnesses a lot of developmental financial resources from around the world, playing very critical roles. You find a lot of downline lending, which is emerging from all the processes. Like First Bank right now, we're aggressively investing in an agency banking network because we already have the largest network, branch network across the country. Now, brick and mortar is expensive for any financial institution right now, but what we're then doing is how do we take the highest value from what we're already sitting on? And by extension into agency banking, which is a major tool that even the central bank is working with all of the financial institutions to use as a way to reach a large, unreached, non-included part of the population, then we've seen another way to take value from what we already have. And this year, we expect to have about 50,000 new agents across the country. We've had our pilots and all of that, and that has greatly been successful. And with the kind of drive that our country is also moving to sort of decentralize our economy from oil, and agriculture and a number of new industries are being opened up, you would find that having the right inclusive financial model helps you to empower people all the way down, but also helps you to create value for them so they can have a better life, and they can also create wealth within the system.
That's great.
Yeah.
So an existing suite of products and services, retail banking, looking for new channels to reach people who previously haven't been reached.
Yeah.
That's very important. Anna, tell us about new products and services. As an entrepreneur and CEO of an energy company, what does this mean for you?
Well, I think just to kind of try and tie in the 2 points that I heard, I truly believe there is effectively a population dividend in sub-Saharan Africa.
Population dividend?
Yes, it should be seen like that. If we look at it from the perspective of increasing especially on the energy side, the customer basis of particular countries, that directly leads to more growth and more opportunities. So we see it very much from that perspective. However, then we go to Philippe's point on why do those slides not change? And they don't change for a number of reasons, and particularly because the funding models effectively do not allow them to change.
Right.
You know, currently, I just read an article a couple of days ago on the successes of the African power sector development, and yes, there have been successes. You know, the REIPP process in South Africa, everybody screams about it, but we do not see the reality of backlash against the program currently. For a number of reasons, but some reason is that in order to make a bankable project in the energy sector today, because the utilities are not considered creditworthy, because the utilities have small customer bases, we're shifting the risks of uncreditworthy utilities to the balance sheet of the countries, because you require sovereign guarantees and other of those things.
Right.
And that's a problem, because that's a double impact on the utility balance sheet and on the fiscal of the country. So if we try to perpetrate the same model, the financial inclusion is going to be really difficult to achieve. In addition to that, we have a dollarized power sector. Without power sector, more deployment of energy on the ground, it's going to be very difficult to bring about growth or bring about any financial inclusion of the services. Because, for example, expansion on the retail banking side, to where? If there is no productive use, if there is no rural areas for productive. So really, we have a problem with the funding models. On the on-grid side, we believe that, you know, as the international development community, we are focusing on projects instead of integrated, looking at transmission distribution, which is the customer heart of it, and generation at the same time, and actually creating markets. How do you create markets, not just projects? Liquid markets within countries and outside through existing power pools. Without that, we will continue with a funding model, which is the only one, which shifts risks and doesn't actually impact on the market side. On the mini-grid side, I think it's just to combine it, because mini-grids, you know, if you look at financial inclusion from the power sector perspective, we should be talking about the mini-grids. And it's kind of the new excitement in the market, and I think it's quite correctly an exciting opportunity, but we should just be very wary of replicating the same mistakes, which have currently resulted in I would say, long-term dependency on the donor and DFI support on the on-grid side,
I'm really glad
and take
you went
local
there.
currency
I'm
instruments.
really glad you went there, and here's why. Because recalling Alexandre and Alain's great slides this morning, you can see a quadrant of the risk-return landscape that we're looking at, whether you're a practitioner on the field or whether you're an investor looking to get your global capital doing something sensible other than just quietly rotting as the inflation rate takes to it. Would you, without putting words into your mouth, but I think you've just summarized that what we see is an uneven landscape of risk appetite here, where the enterprise and indeed the market is carrying an enormous amount of risk, whether that's purely in local currency, which is finding its way to places of need, as opposed to maybe some expectations which remain configured in a very conservative way. I'm glad you went there. I'm glad that was the point you brought out. What I'd like to move on to now is, where we have been talking about financial inclusion for some time, and there are, a multiplicity of systems at different levels. What do we think might work? What do we think might be less successful? Let's focus on what works, because we're trying to share our collective learnings and our collective mission here. Ibukun, if I can start with you, what sort of channels for a financial inclusive approach have you found successful at First Bank Nigeria?
Okay, let me start outside of First Bank and say first and foremost to even financially include a large portion of the population that is outside of it right now. Infrastructure is key because when you provide road networks, you have the right power provision across the country and all of that. You create a base that allows our finances to have a chance to succeed. Because there's no point creating financial opportunity to people that what they intend to do in itself is destroyed by the system simply because you do not have the basic infrastructure and all that is needed. I imagine in a country like ours, if power is resolved effectively and if we have good road networks or rail lines that move goods back and forth across the country and all of that, the process of onboarding a lot more people onto the financial system will become clearer and easier, and it will be highly de-risked in a sense for us. But having said that, I mean, there are a number of things that are being done. We have a lot of groupage sort of lending.
Right.
Because if you're working through cooperatives, organizing the small people that on their own individually they're not attractive to you in any way to sort of financially involve them. When you group them together, they become a better asset. You know, the risk is highly reduced, and you can work with those groups as they self-regulate, and you can channel resources to them and onboard them into the financial system as a way to support them.
Bundling of clients,
Yes.
some collectivized lending. Okay. Giles, you've got a number of portfolio companies within Barak. What systems have you seen being more successful rather than less so?
Yeah, I think a lot of it points, and it's a little bit of a different angle to the banking sector. Obviously, we stay very much away from the bundling space. I think we do take a very individualistic approach, and that's how we've grown the business up over the last 10 odd years. And on the one hand, I think, yes, there's certainly advantages to bundling that we see outside of our alternative financing space, but I think we've always looked at an approach of a bit of flexibility in being able to look at some of the first short term and now going into a bit more of the infrastructural finance side. We can look at an array of different sectors, which I think some banks maybe take a little bit more time to get into.
So you're saying, if I've heard you correctly, that the risk appetite remains front and center and looking for those opportunities and seeing them coming out?
Yeah, absolutely. Okay,
so inclusive financial systems existing, and what's been successful. Philippe, for you, what's been the most, the strongest catalyst for success in putting together an inclusive investment?
For me, I think there's a perfect storm brewing. Following 2009 crisis, how many banks are doing 15, 20-year lending for infrastructure in sub-Saharan Africa? Foreign banks, maybe one. We talked about it on panel one, but there's effectively one bank doing it. So that screams for local solutions. Second point, and to the point that Anna was making earlier, we're working closely with the Kenyan Ministry of Energy to put in place, and I think there's an announcement in the coming days, to put in place a framework of local currency power purchase agreements for renewable energy projects under 10 megawatts. It's a start. But it's a place that we need to get to, and this is the point that Anna was making. The third point, as an infrastructure specialist, we have a fixation on base load 350, 450, 400 megawatt plants. They're useful. They're needed to provide the steady power if you want to attract manufacturing plants, industrial zones in Ethiopia, as the speaker was talking about earlier this morning. But it's not going to electrify everyone in Africa. Not in 50 years, not in 100 years, because the money to put those transmission lines there is not there. So 5 years ago, when you spoke about off-grid, mini-grid, everybody here would have smiled. People are not smiling today, because it's happening, and we're doing it. And we talked about bundling. It's actually happening, where you can have these series of off-grids being bundled and then attracting investors that would have never considered that type of investment in the past.
And
you just passed the ball, so I want to see you take it over the line.
Yeah, just to add to that, couldn't agree more, because on the bundling side, on the mini-grid side, bundling those customer credits. I mean, the perception is these are, rural kind of areas, uncreditworthy purchasers or kind of retail type side of purchasing of power. But I think it can really be linked with the new technological advances, so we can see the pay-as-you-go system, the prepaid systems, etc., which are facilitating the de-riskment on the payment side. And when it comes to kind of bundling and aggregating that risk, it's much easier when you have the potential to aggregate across a vast, diversified portfolio of potential customers on the mini-grid side. And we are currently working on a new guarantee facility, or insurance product, which effectively guarantees certain level of payment risk and demand risk on the mini-grid side. Why I speak about the demand risk, because it's really on the inclusive growth. We should look at tying in other services to power provision. So whether it be banking one day, whether it be other basic appliances, etc. So it's an integrated way of making sure that you de-risk the mini-grid power provision through increasing productive use and demand of the actual market that you're serving. But without aggregating or trying to aggregate those risks, it's going to be very difficult to attract the type of funding. So I think fascinating new potential innovation in that space, as long as it doesn't replicate the funding model of hard currency as we have currently on the on-grid side.
I love it. That's a fantastic segue from what systems work. By absolute definition, you have to be innovative. And you have to leverage technologies to address these problems, which we've been looking at for decade after decade, and now we can actually do something about them.
Let me share one.
Please do.
I just remembered a partnership we're in discussion over right now. So there's a company that is working to help facilitate smallhold farmers across the northern part of Nigeria. And what they're doing is they're developing agents network to work with farmers in terms of what they're growing, who needs to buy it, and all of that. And they have all these small units, little POS type of machine that they use and all of that. And we realized that for our agency banking, we can readily add on to the income stream for the same agents without us duplicating those agents. So they're facilitating a service to farmers. They can sell the mobile phone credits and all of that, and they can act as financial agents for us. Same small machine, which we don't need to buy a new one. They have one technology base. We can syndicate all the information and all of that, but we can create jobs for a huge population of young people that we have that don't have work. We can make facilities that otherwise are not accessible to people in those parts of rural areas to be accessible to them, and yet we're creating an economic model so that there's stuff for a lot of integration that will cost the kind of development we're seeking.
And it's a perfect segue into the familiar conversation of technology leaps. And of course, we're all familiar now with the power of mobile money. If you're slightly new to this conversation, M-Pesa sort of was born about 9 years ago. It was initially funded by the UK Department for International Development, put together with a technology group with Safaricom, and has transformed the economy in Kenya, where on a daily basis, transactions on M-Pesa, which is M-Pesa, if you just imagine money by SMS, okay? You can text money to one another. Your mobile wallet is slaves to your cell phone number. You can't have a cell phone without going through governmental diligence with your national identity card, so that is a pretty solid repository of identity and indeed of value. And that has changed the nature of the economy in Kenya, and that technology is continuing to penetrate more deeply into Africa. Clearly, there are a number of enabling conditions which are required for a mobile money infrastructure ecosystem to take off. A strong incumbent telephone provider is important, as is a network of agents to be able to cash your money in, to turn it into SMS money, and then to cash out again because it is a balanced economy. But I'd just quite like to repurpose that question in terms of, not only how have mobile money payments transformed African economies, how have alternative ways of paying, how have alternative channels to your conventional way of doing business made a difference? And how can we lean into this as a community to really push that innovation agenda? I'm going to start with Anna, because I think you're probably closest to me in this space.
But I think just briefly to expand on the example on the mini-grid side, payment risk is a key risk in power sector development, whether it be on-grid or off-grid.
Right.
Payment risk is de-risked on a number of sites in sub-Saharan Africa through the mobile telephone prepayment systems. I mean, it's the only way you're effectively, improving the credit capacity of the customer base, because they consume only what they have prepaid for. There are risks with that as well, though, because we're talking about scaling this, deployment of mini-grid energy, which means that you need to actually increase demand as well for the energy, which means that perhaps the prepaid model might not be the best one, because payments in rural areas fluctuate compared, depending on weather-related disasters, parametric events, agricultural input at a particular point, seasonally depends the power purchasing ability of different customers. So if we look at, I think again, a little bit more in a more integrated manner as to how to take payment risk and demand risk, which are the two key risks in rural areas, and come up with even more innovative ways through telecommunications and other technologies. On the payment side, I think that's the next step. And I think NG is doing something, I don't know which country, but they're just starting to think of tying payment to different periods, whether it's post-harvest, pre-harvest, etc., just to encourage or kind of facilitate the financial inclusion, because you really can't hurt, the customers when it's, you can't deprive them on energy when they need it most for productive use. So, currently we're doing really, de-risking the mini-grid market through these prepayment models, but I think there's more innovation to come, and it has to come to scale it up.
Okay, just to jump in, and this is really for those who are looking at investing into Africa and to understand that, look, you're not going to have all the data you need at every point in time. You can't, and you will be wrong many times based if you just use data. And the biggest example I probably can use is opening up the telecom sector in Nigeria. All the companies came in, bought the licenses, and assumed only 8 million Nigerians could afford mobile telephones in a country then of about 170 million people or so. Bottom line is, when you have a huge informal sector, the real wealth of the people is not visible to you, and you have an understatement of capacity to pay and ability to pay. In most cases, they might not have a route to pay you until you have access to them, but once you can get the service to them, you will get paid, because traditionally there's a credibility history. Now, what happened with the telecoms? 8 million lines, they had a 5-year plan. Well, in 2 years, they'd sold all their 8 million lines. The service was a mess because everything they had prepared was not adequate for what happened. Well, fast forward to now, how many years after? How many mobile phone lines do we have in Nigeria? About 130-something million, if not more, and it's still growing. And the people can afford to pay for it. They also didn't factor your driver, your cook, your gardener having 1 or even 2 mobile phones, and every child in the household and all of that, because a large portion of the wealth within Africa is not in your statistics. So once you're going into inclusiveness, you have to have the faith to take some level of risk. Yeah, some people will get burnt if you don't do your homework. But you can move in stages, having growth-leveled investment, will help you. If you're growing in stages, you would encounter some issues and you will correct and you will move on. And that's how the guys who eventually, I mean, imagine a Vodafone or so who thought Nigeria was not attractive at that point. They came back later and tried to get in, and I think they got burnt one way or the other. But the guys who got in, ask MTN how much money they've made out of Nigeria in the number of years. And that goes for many businesses who have faith and have the courage to know that you can't go into Africa thinking I'm just going to make quick money and run out. No, it's not going to work. You're going to have to go in for the long term. You're going to plan. You're going to find locals who have an understanding of their market. Can we afford most things that we want? Yes. But half the time, your statistics that you have, because we're not great at capturing data. And we're working on that right now. There's still a massive gap, but you have to have faith. And you have to go in knowing that we're more sophisticated than you assume.
Right on.
Even the most illiterate Africans.
Right, thank you very much. Yeah, that's, so you go. Philippe.
I think it's important to say you were talking...
Top that.
Well, you can't. But you were talking about leapfrogging. I mean, we did that 10 years ago in the telecom sector. It's happening in front of our very eyes today in the power sector, right? Well, Nana is talking about off-grid, mini-grid, but in particular off-grid, where we're doing transactions in northern Tanzania, for example, in a community of 2,000 people. They're never going to see a transmission line. No. But you can make a very commercial investment providing the power to that community. And when Nana talks about financial models then and today, you have to be able to look at an investment of under $5 million, which eventually will grow into a mini-grid and then a pool of investments that can reach the 50 to 100 million, which becomes interesting to investors. We're seeing it happen today. And in terms of the payment risk, frankly, from our experience in these off-grid projects that we're looking at, the willingness and ability to pay is definitely there, because the ability to have a light bulb 24 hours 7 is something that people are willing to and able to pay.
It's fantastic. It's fantastic. And I think we're looking at that. That's the scale of the opportunity as well as what we've really got to get done. I want to wrap up with one final thought, if I may, from the team here before opening to the floor. And I can hear some debate underway as we proceed. Perhaps if we just keep it to one conversation at a time, that would save everyone a lot of time. How do we make these solutions work for people in urban and rural, male and female? How do we get our approach, and I want to throw it beyond just finance, how do we make this enabling environment work for everybody? And I just want to have one world-class Nobel Prize winning snapshot from each of you. And I think I better start off myself since I set the bar so terribly high. I think that we as a room, we as a city, we as a continent, we as a planet need to stop thinking of inclusive finance or financial inclusion as some sort of beneficial impact activity for the little people. Yeah. I think this needs to be the norm rather than the exception, and here's why. Because it is fundamentally about putting the customer at the center of everything you do, and there are more customers in Africa than anywhere else. And we see all around us the legacy of moribund zombie businesses which forgot all about the customer. So that's my tuppence worth. What do you think?
Well, I mean, any smart business person will not use 50% of their asset to generate resources for 100% of their responsibility. Right. Africa is literally 50-50 male-female. So whatever you do, if you go into the continent, you have to create a product that services or that draws in both sides of the divide. You must be able to include the women and include the men, and that's how you get value from the population, because otherwise you're only dealing with half the population.
Design it for everybody.
That's it.
Giles?
Yeah, I think maybe to touch on the point of rural versus urban and the growing middle class, and maybe that's the natural progression to look at that a little bit more and move some of the financial inclusion into the more urban areas. I think we as a fund, certainly more than 50% remain focused within the more rural agricultural side within Africa, because although I think we touched on it earlier in our discussion that it's not easy. It's a tough process. It's a manual process. It's a very hands-on process. But I think that's where you see the yields and certainly a lot of the progress coming from those grassroots.
It's a brilliant point. Nobody here is doing anything easy. So if you can accept that up front, then that possibly allows the mobilization of the necessary innovation, commitment to take risk, and all those other wonderful things that we've been covering here. Thank you. Anna?
I think the main point would be to remember that in our kind of sector, which is energy, these are capital-intensive projects. We need to come up with new models that really stop the donor and DFI dependency of the African power sector. There are lessons to be learned from the on-grid side, not to replicate them in the mini-grid side. Leapfrogging is there if we think outside of the box, outside of focusing on projects, but really focusing on creating markets amongst the numerous customers on the mini-grid side, and markets through regional already existing power pools on the on-grid side. This all aligns with the new vision of the African Union, which hopefully will penetrate all the way down to new funding models. And last thing is, in terms of inclusiveness, as Mohammed Yunus said, who is the hero on the microfinance side of things, women are just better credit. Therefore, fund us and you'll be all fine.
Well, speaking as a company with 82% female customers and about 95% of my leadership teams are females, I have to completely endorse that. Philippe?
For me, as a multilateral, it's making sure that us, but as well the world that, and the space that we operate in, it's not about ticking the box. It's not about meeting KPIs. So in particular for PIDGE and our early project preparation facilities or companies that develop projects, take them to financial close, it's about seeing how you can embed those things in the project design, in the project development, so that you achieve better outcomes for all, including women.
Thank you so much. Let's take some questions from the floor now while we've got a few minutes left. Sir.
My name is Tony Cole. I'm from Nigeria, the Sahara Group. I think this question will go to my sister Ibukun. M-Pesa has worked beautifully in East Africa, and for many years it's been trying to come, that model has been trying to come into West Africa. But then what's the issue between the banks and the telecom companies to allow such an innovative mechanism that can reach the underreached for inclusive finance and come into the West African region?
Shall I give a quick perspective, and then I think that's probably yours. The point about mobile money adoption is you require a number of different factors to make it successful. In Kenya, Safaricom was by far the largest telco, and they were able to deploy this service with relatively little outside interference. The thing that made them succeed was their commitment to investing 60,000 agents across the country, where you could give them 10,000 bob and 10,000 Kenyan shillings would appear on your phone. There was a very easy regulatory environment to make that happen in Kenya. Those factors have to kind of be in place, or I would argue that there at least has to be a concord where banks and telcos don't need to be fighting. Actually, they can both benefit from cooperation if they're prepared to collaborate. But I think you're better qualified to talk about West Africa.
I think essentially you've answered the question, but the part of it that you don't see is there's a lot behind the scene on this particular issue. Because when you are a telco operating in a 200 million people country, you can see the numbers. And when you have almost 140 million telephone lines, those are clients, so you see the money. So the telcos are dying to do that. But the thing is, they become banks, in a sense, when they can do that. They're not regulated by Central Bank of Nigeria, as are today. So that creates a regulatory issue. So there's been a lot of conversation behind the scene. And of course, the banks are a power block that will fight for their dinner not to go to somebody else one way or the other. So all different things are at play. Now, the easiest way is a collaborative way. But the telcos want to have all the food to themselves. So if you go into a market, if you're the new guy in the market and you want to take somebody else's dinner, you're going to suffer to be able to take it. So in reality, it's an ongoing conversation. They don't have the license, the banking license, and they can't do what they want to do without it. We have it. but they can work with us. So there are loads of stuff going on. There's a lot of signing going on and all of that. I think somewhere along the line we'll find a solution.
Are there any telco representatives here, Justin? Is there telco?
You're no longer a telco representative.
Do you want to keep running with that, or do you have another question? Because I'm very happy to bounce the ball in any way. All is well.
Sorry, my name is Wale. I work for the GSM and I'm head of Sub-Saharan Africa.
I used to work for MTN.
In my previous life, I worked for MTN.
Yes.
And I was very, very involved in the early stages of trying to define how mobile money should work in Sub-Saharan, in Nigeria. And I think that Ibukun has spoken very clearly what the issues are. It's about whose lunch is going to be eaten.
Yeah.
And I think the reality is that technology is a disruptor. Yeah. You can delay it, but ultimately technology will have its way. I know that, yes, there are a lot of talking going on in Nigeria now in terms of finding a way for the parties to perhaps better collaborate. But speaking with my telco hat on, I think the banks are in for...
Okay, so completely abusing my position as chair for this, you two are definitely sitting together at lunchtime today, and I'm going to watch. Okay,
don't worry, we know each other well.
The lady just one row in front.
Hi, my name is Manji. I just wanted to pick up on the point about that the two ladies touched on, which is about opportunities for women, right? And the question I've always wondered in my mind is, if you look at the banking sector or the financial services, whether in Africa or actually even here, it's historically dominated by men. And so as a woman, if I'm a female business entrepreneur on the African continent and I need to have access to capital, and you basically have access through your network, and these women are effectively cut out from that network, is there really a responsibility? And I don't want to call it a moral responsibility, because actually I think it's a business responsibility, right? For people who sit in that power position, i.e. the men who sit in those power positions, to actually pull women in so that you can actually reach out to that 50% of the customers that remain underserved or unserved.
Do you know what? If your project is good, if it makes business sense, nobody cares whether you're female or male. That's just the bottom line. It's a business issue, and I don't want to see the face behind it. I just want to see that the numbers work. And that's really what it is. So one of the things we say, I'm a co-founder and past chair of an organization in Nigeria we call WIMBIS, Women in Management, Business, and Political System. And one of the things we teach the women is put the gender at the door. Work on the skills, competence, and capability. Take the situation and fight for it, knowing you deserve it because you've earned it, and because you know you can deliver. And when you know you're in that position, knock on the door until you break it down and you get what you want. So don't look at it from a male and not female. Make sure you work your project, do your due diligence, make sure your business plan makes sense, and you will find the money that you need. Now, outside of that, there are clear advantages, because if you go to organizations like Bank of Industry in Nigeria, they have a gender desk. They have a whole team to help women who have the right projects to get the kind of financing that they need in order to fast track it so that we can close the gap. So that exists. If I meet you tomorrow and you have the right project, I will knock down every door to make sure you have it. But it will not be because you're female. It will be because you have the right project, but you just happen to be female as well.
First of all, yes. If I may speak to your point, because I'm a micro-lender, and 82% of our clients are female because they're really good businesses.
That's it.
Most of our senior management are female because they're unbelievably competent.
That's it.
I think, if I may, the point that you've just addressed is that all too often we don't have people like you making those decisions. And we don't have people like you who are helping to design those products and services around that point of need. And if I can bridge those two perspectives, absolutely right. You can't have a duff business and get ahead because of your gender. But if you've got a good business, you shouldn't be held back because of your gender either. And I think that's something that we all need to be fighting for. So my honest answer would be come to 4G Capital, we'll do what we can do. Right, ladies and gentlemen, thank you very much. I'm getting that special look. So that tells me it's time to wrap up. Thank you so much for your attention. Thank you to my friends here.